Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is a CPI again today, and again, I mean, we've been waiting all week. This is going to be a pretty intense moment here. Hold on, I'm fixing my sound. I'm just going to go like straight into the CPI here real quick. Expectation is spot 2. If we get a spot 2 or a spot 3 or a spot 4 on the core number, then this market is going to just completely flip out, right? If we get in line or lower, I think that you're still going to see some volatility, but the overall action is going to be somewhat muted because that's basically what is currently priced in. So, I do think, though, that you might see, with an inline number, you might see some initial buying, because there does appear to be some significant amount of hedging out there against the possible downside again. So that's basically what we're looking at here. And yeah, that CPI, what does that mean? I don't know what you mean. Oh, CPI, yeah. I gotcha. CPI. We just need to have everything narrated. Man. Not my best morning, apparently. Got 30 seconds. Focus. Laser. Good morning, Octavius. Okay, they're moving up. So we got CPI, well, they're all in line. And like I was saying, maybe I had said it wrong, but yes, there was a lot of hedging short. And so on an inline number, we did get a little bit of buying. But that probably like retraces, right? So the dollar getting creamed here. Bitcoin bidding a little bit. Man, it's still like Bitcoin is just like goes nowhere, right? maybe this time something will actually happen, but so in line. That's really good. The S&P should be able to get a good bid off of this, right? What that means for us in the treasuries, though. Well, I tell you what, the people that bought the 10-year at just below 4% yesterday really got a steal there, didn't they? I bet those guys are feeling really great right now. Wow. China's internet giants order 5 billion of NVIDIA chips to power AI ambitions. Wow. Well, so I don't have a very clear read on what would happen next, but I do see possible opportunity to make a market over here in ZN, so we'll do that. And that one order worked out so well, it didn't give me a chance to get 2 or 3. Should have gone in full clip. Because that was like right about where I was going to dump my first contract. I think I'll just take the one. Man, I was having all of these like daydreams yesterday that the CPI came out hotter than anticipated. But I knew that it was pretty likely to come in where the market was saying. So good morning, Mission. Well, this could be interesting. Okay. This could be a little dicey because there might be a little bit of stops over here, down here, right? Yeah. See, like, okay, can I rant about the CPI for a second? It really pisses me off how much like misinformation there is often out there on social media about CPI. Like I saw this video yesterday and this guy was like, well, CPI is going down, but I'm sure not feeling it in my budget. No, dimwit. CPI is how much inflation is increasing, right? In order for prices to come down, you'd have to have a negative CPI. So it's not that prices are coming down, it's that they're just not going up as quickly as they were. That's what a lower CPI number means. And all of these retards are pushing this idea that like prices are supposed to come back down or something. It's retarded. It pisses me off. And then they go on this big long thing about how how the CPI has changed. So yeah, CPI has changed. You know what they did to it? They made it better. They made it better, guys. Like, go and look at the actual changes that they made. They changed it so that CPI can continue to be an effective measure that you can like compare past, numbers with. Because they're right. Like, if the quality of a good changes, that has to be factored into it. If a good like disappears, you have to have a substitute. Like, there were good changes that they made to the CPI, and everybody treats it like it's this conspiracy. There are some deficiencies in CPI still, especially with the housing component, right? Because the housing component is so lagged, it's practically useless for policy, at least, right? But I don't know. I think the Federal Reserve knows that, and I think in the end they were able to deal with it okay, right? I mean, in the end, they raised interest rates and fixed things, right? Okay, well, so far this spot that I've staked out hasn't been too stressful, but they are pushing on the other side right now. It seems that as the dollar rebounded off of the lows there, that the treasuries came through and some of the people that went long are getting stopped out right now. So that's not what we want. I'm not going to say that it's outside of my scenario, but it's definitely not what we want. I feel like a lot lately that the market has been fighting me, as soon as I take the position, they go and they do something that just is like completely weird. There's a decent iceberg at 16, but of course it's 16, so yeah. Oh, it's gonna be a 5K, huh? 48.90. Okay. There's stops. There's 4%. Oh man, I don't know, guys. That right there is much, much further of an excursion than I was anticipating. But it is CPI, so you'd have to expect crazy things, right? The volume from this is a little curious to me. Because there is a lot more selling off of this. Like, look at that. Well, past 0.4 now. Really? Okay. There was a little bit of a pushback that time. There was somebody really wanted to sell the news, I guess. Well, it could be, for instance, that they were long from way back, maybe even like participated in the auction, right? And, you know, wanted to take their profits. And that's just how far they moved the market when they took their profits, right? Like that move there may have absolutely nothing to do with the CPI or anything else like that, right? So that's kind of where it's like, that's a little unfortunate, because I don't think that move necessarily says that like the basis of the trade that I was trying to make was wrong, right? But sometimes freak things just, you know, sometimes unanticipated flows are out there, right? That excursion to the downside was certainly a lot more than I anticipated, though, right? I mean, we may still be okay, but that was a bit of a doozy of a stop run, right? And there was definitely stop orders on that, because you would see it go like thousands of lots at 2 or 3 prices all at once. So there had to have been some longs that you know, people that got long at like right here where I was 18.5, right here where I am on the ZN. There has to have been some people that were long there and decided to puke in that. Now that we're back below 4%, though, I'm hoping that kind of acts as a ceiling. Let's see. One thing is, I didn't get to say it. I should have. You know, sometimes I forget to say what I want, because I want to be like, to say the thing so that I can go back and prove that to myself that I did think that, you know. But I was thinking this morning that the core was going to be in line, but that the headline was not. I thought that oil had been up enough that headline would maybe be 0.3, but it was not. They were both in line. That is really, really great for the market, really. So let's see here. Let's go read some reactions, yeah? Mohammed A. Arian. U.S. inflation came in as expected with monthly gains of spot 2 for both headline and core CPI. The annual rates are now 3.2 and 4.7% respectively. These numbers will come as a relief to those who are worried the July data would already reflect price pass-through from higher energy and food prices. They will reinforce the majority market view that the Fed will refrain from hiking in September. The implied probability of a hike dropped some 15% to below 10% following the CPI data release. Okay, we're getting a little bit of a sell here again. So yesterday, I decided to switch my monitors around because my really nice Asus is kind of starting to go. And this one has HDMI, and I wanted to be able to put 2 monitors on my KVM switch. But the color on this monitor is a little bit different. I spent a lot of time trying to match and everything, but I can still tell. Like, the red is more vibrant. And I don't know if that's good, if it should be more vibrant or not. Now I'm like, I need to go get one of those little color things, and I don't know. So I was hoping that 4% there would kind of like show a little bit of fight, but at the moment, it doesn't really look like any one individual price is showing too much conviction or anything. It's pretty random, just the flows flipping around and flopping around, right? We are like slightly to the upside, but I'm not seeing a really strong flow come in long. It's just kind of like there was the initial pop on the buy, large meta order sell, and now we're maybe getting the post meta order regime change period, right? Nick Timmeros, the summer of disinflation continues. The consumer price index rose 0.17% in July from June, or 3.18 from a year ago. The CPI was up 1.9% over the 3 months through July at an annualized rate, and up to 2.6 over the last 6 months at an annualized rate. And actually not a whole lot of commentary out there yet. Maybe Zero Hedge has a story? Yes. China slams Biden for blatant economic coercion and bullying after U.S. imposes investment limits. Oh, well, you know what that means. That means maybe I need to go and buy more REMF so that, in case China decides to reciprocate with limits on the export of rare earth minerals. Highly speculative in all. Full disclosure, I own REMF. Expectations for this morning's must-watch CPI print were a month-over-month and year-over-year rise in the headline and a modest slowing of the core year-over-year. However, the Fed will be watching its new favorite signal, core services CPI X shelter, which re-accelerated in July, up spot 2 month-over-month, and from, the headline CPI rose 0.2% month-over-month, the same as in June. Today's increase in CPI year-over-year broke the record equalizing streak of 12 straight months of declines. There's lots of numbers here. Both goods and services slowed in July, but services remain extremely high. The index for shelter is by far the largest contributor to the monthly all items increase, accounting for over 90% of the increase, with the index for motor vehicle insurance also contributing. The food index increased spot 2% in July after increasing spot 1% the previous month. The food index at home increased spot 3 over the month, while the index for food away from home rose spot 2. The index for all items less food and energy rose spot 2. Indexes for airline fares, used cars and trucks, medical care, and communication were among those that decreased over the month. For a second month in a row, real wages rose year over year in July, but only barely at spot 2. So the question becomes, is this an inflection point in inflation? Is the overly optimistic view of the world heading for a disinflationary soft landing about to crash on the shores of commodities reality island? Okay, so basically, Zero Hedge would have loved for CPI to be hot, and it wasn't, and they're still hopeful that at some point in the future that it will become hot again. That's what that is. Now, I feel morally opposed to participating in cryptocurrency now. That's my take. Yeah, the red is bothering me. I'm gonna try and change it here. That should be good. Okay, so there's a little bit of a node at 16.5, but they are starting to reach higher. I can see the 5 years turning around. I'm gonna zoom these in here a little bit so I can keep track of the cumulative delta a little bit better. How do you, I think that you just message them. I think that you send them an email. Should keep an eye on this dollar here, because you see the dollar come all the way back. Jason Furman, the CPI came in basically just as expected, the second unambiguously good month in a row following a few months that most likely should be interpreted as improvements as well. Yeah. August is likely to see an increase in headline month-over-month inflation because of gas prices. Yes. I don't think that's true, Rodrigo, but I don't know off the top of my head. I'm pretty sure that you get more than 2 weeks, but... Because, you know, it's not uncommon for people to go in and, you know, get themselves set up with their broker and their data and their platform and then go through all of that and realize that there's one tiny little thing that they need or that matters to them that setup doesn't work for, and then they have to change it. So it's not uncommon to do that. And I think, oh, I guess you're right. It's a 14-day money-back guarantee, but I'm pretty sure SAFSAF is within that that window as well. So, but I think, let's see here. I think you just contact support. Their website is constantly changing, so I don't always know the deal, but I think that, you know, on the main page, there's a support button, and you could just ask for the refund through the support button. Fox business panelists, the inflation that we're seeing is all in the stuff that consumers really have no choice but to buy. What inflation that we're seeing? You know, this one is so tough because here's the problem that you're going to see in the economy right now, okay? Inflation hurts people at the bottom the most, right? So, not to toot my own horn, but I'm kind of more upper middle class. I'm kind of on that borderline between between middle class and upper middle class, okay? And I'm in the computer space. So for me, when inflation happens, my ability to go and, you know, negotiate a better salary or switch jobs to get a better salary is, you know, that's not too difficult for me because there's a lot of demand for my skills, right? But if you're like a barista, right? Yeah, you could quit and go to like the other Starbucks down the street. I don't know, like you're not going to get a pay increase, right? You have to wait it out essentially. Yeah, your pay will tend to go up over time, but it's much slower and it's going to lag, right? And so what you're going to see is you're going to start to see that the people that kind of have that ability to manage the inflation are going to be doing really, really well. And the people that are in the lower working classes are going to continue to struggle for probably, 3 to 5 years still until they finally catch up. Right? So you're going to see that come out in the commentary. Like just take note of it. Like if you're on TikTok and you see somebody complaining about inflation, right? Then you kind of have to ask yourself, and I know it's unsavory, but you have to ask yourself, well, where on the income curve are they, right? Because you're going to have to realize that, like, one, that's not going to be representative of everybody, but two, we're going to have to worry about the most vulnerable of us the most in this kind of a situation, right? Okay, there's finally my 2 contracts coming off. Good grief. I don't think that the thing on the right is calculating that correctly, though. It's saying that I closed that at a loss, which was not true. Does Peter Davies do one-on-ones? Yes, he does. At least I believe he does. You say that as if it was their fault? No, I'm not saying that as if it was their fault. I'm just saying that what I'm pushing back against is their tendency to want to try and make it seem like the struggles that they're facing are the same struggles that everybody is facing, right? Like really, it's to their detriment to do that, though, right? Like, really, what we need people to understand is that inflationary policy hurts the most vulnerable among us the most. Don't let the don't let the nanny state get away with this idea that we need to spend more money because it helps the poor people. It doesn't, right? You put too much money into the system, you get inflation, it hurts poor people the most. Do you know how to, I think it's just Peter Davies at jigsawtrading.com. Yep, it's Peter Davies at jigsawtrading.com. You need to change the video resolution. Is my resolution that I'm sending incorrect at the moment? Does the stream look different to you guys today? No, video. Oh, it is. It is. Okay, guys, I am going to stop streaming for a moment and restart the stream so that the resolution is correct, okay? Okay, sorry about that. Yeah, it was so like I stopped it. I changed the resolution. I came back. It streamed for like 5 seconds. I told you guys it was back, and then OBS crashed. So, but now we're back. I fixed a couple of things yesterday because I did not like that my camera was like choppy and delayed and stuff. And I believe that it was just the computer could not downscale from the 4K all the way to that little window well enough. And that's what was causing it. So I switched back to the situation of using the camera, the USB 3 output. I also did a little bit of research to make sure that I was going into the best plug You don't quite like OBS resolution? Is it? Well, I mean, the resolution that you're getting is... I'm not quite sure what you mean by that, but you should be getting 1080p. And the bitrate that you should be getting should make things pretty clear. And probably need to upgrade that. Keep forgetting about that thing. But yeah, I switched back over to using the USB, and I made sure I was going out of the right USB port so that like the USB port would charge the camera enough. It looks like that's working because the camera battery is like full battery right now. Nowadays with monitors, we are getting 1080p is not enough. Oh, sure. Well, it would 440 would probably be better. I don't know. I mean, like, I feel like that would only matter if you were viewing it full screen, though. No? Okay, so we got to, like, seller's break-even point and kind of reverted back a little bit. But there has been a pretty good, steady buying throughout this recovery here. Yeah, I think that in the coming years you'll see a change though. There's just a couple of things going on that are you know, there's just a couple of things, key places in the technology that are still a little lacking for that to happen. So, like, the first key thing was AV1 coming along, right? But that was only just a few months ago. But AV1 is a much better encoding for reading the stream, right? The second thing is just like the power of the encoding software and all of that sort of stuff. I think we're kind of there, but like it's like if everybody was running on the latest hardware and the internet connections could support it, then I think that you would be getting that. But there's all sorts of weird stuff. So like as an example of like, there are a couple of key places with the technology where things in the industry kind of lag. It's really kind of weird, right? So like a key one is DisplayPort 1.4. So with DisplayPort 1.4, you can get like, I think you can get 120 hertz resolution on a 4K display. It was kind of like maybe you can get higher than that. I can't recall, but the problem is that not a whole lot of stuff is running on DisplayPort 1.4. I mean, like your latest video card probably has it, and your latest monitor probably has it, but most of the cables that you buy might not be compliant, and that most of the cables that you get won't be compliant. And a lot of the kind of like monitor peripheral sort of things like KVM switch are definitely not. Like there's only one KVM switch out there that I know of that actually gives you true DisplayPort 1.4, and it's like twice as expensive as a comparable KVM switch. So that's not completely accurate, Lucas. So what happened with LK99 was a couple of different places, you know, tried to reproduce the sample and run the test. And their conclusion was that it was ferromagnetic, which is why it will like hover above the magnet, but that it is not actually a, sorry, this is what the dollar moved there. Okay. Yes, gotcha. But that it's not a superconductor. Okay. It's not over yet though, because there have been some good researchers talking with the original authors of the paper. They have been telling them a couple of things. They're saying that like the purity of the sample is really important. and they're sending some samples over. So sometime towards the end of the month, another lab should get the samples that they created to be able to test it. If the samples that they created are not confirmed as superconductors, then we would say that LK99, it's over. As the whole meme is, it's on, it's over, it's right. Okay, but it is not a scam. What we're seeing really suggests that if it's not a superconductor, that has more to do with like I wouldn't even say the quality of the researchers, because you got to remember that the two main researchers that have been working on this did not want to publish it, right? You got to remember that. They weren't ready to publish it, and it was a guy that had been hired to manage them and was disgruntled that put it on archive before it was ready, right? So the idea that it was like the two main scientists released it even though they knew that it wasn't a superconductor and that it was fraud, that's not true. But it could be said that the quality of the research wasn't very good. But we're also not quite to that point yet. Colors on my monitor are still bothering me. I don't know what I need to change here. I think that I think that I can bring red up maybe 2, and maybe it's green. Yeah. But now it's maybe a little bit too bright. So I will come back here and change the brightness, contrast, maybe bring the contrast down to 70. That looks a little bit better. But yeah, I would not say that it's conclusive yet that it is not a room temperature superconductor, but it doesn't look good, right? Doesn't look good. You're saying wait, it is confirmed now? Well, it's been shifting back and forth like hour by hour, but there was like, I think it was late today is Thursday, right? I think it was like late Tuesday where a bunch of key Twitter people on the issue had shifted to that they don't think it's a superconductor. So I think that still kind of holds. Let's see. According to their patents, LK99 becomes a genuine superconductor only when current flows through it. So LK99 is not a conventional superconductor, but maybe a super semiconductor. Sounds like they're still kind of in limbo. Sure is a roller coaster, isn't it? Yeah, I think the Peters Davies at jigsawtrading.com is his email. You know that there's this thing called Google and you can search for these things yourself, right? I don't think that I have some key piece of information that nobody else has. I'm pretty sure that his email is somewhere on the websites. What's up with the feds shooting your neighbor? What are you talking about? I'm a little afraid to worry about to touch it, but I'm also wondering if the kind of the offness that I feel is because of the display not running at the full hertz that it can. Like if I take this one, hopefully this doesn't screw the stream up, but if I up this to the 144, yeah, that does look different. Problem with that, though, is that I have had some issues where the monitor will kind of blank out from time to time with that. The KVM switch doesn't always handle it for some reason. It's like the quality of the connections like matters massively under that situation. By the way, it does appear here that the dollar is being pretty dominant and is looking pretty stubborn also. So I'm thinking about bailing after all of that. There was a point where I could have made like, what, 15? What was the most MFE that I got on this? 13. Gonna give it a little bit more time, see what the near flows are here. It looks like we may have found a little spot where they can dig in. Okay. Had one of those kind of head fake ticks where it ticked up pretty strongly but didn't hold. Are you a retailer or a firm? Is that, I mean, who is... I'm a retail trader, just like everybody else. What is their Discord? So to open up their Discord, there's like within the Jigsaw Day Trader, there's a little Discord window, and you can open it up from there. So it's totally okay for you to use me as a resource to answer easy questions, right? But I would try to get into the habit of searching through for the answers for yourself, because that's a really key part of trading, right? Yeah, it's fine. If it was making it hard for me to read other messages, then maybe it'd be a problem, but it's not. So now I'm detecting a slight upside bias, but it's definitely slowed down. There is some big orders kind of messing around at 17.5 as well, so there may be some of the guys like myself that buy the dip, you know, might be trying to take some profits there. No, it doesn't work like that, Saf. You have to open up the jigsaw and then, because it won't let you in without like connecting your jigsaw profile and this stuff. So you have to open it from within jigsaw the first time. Faltering there just a little bit. What is your code to buy? I have an affiliate link in the video description. What happens when a big size limit order gets canceled? Something definitive? Well, I would say it's very contextual. So, for instance, right now at 17, there's 2,400 on the offer, which is a little bit larger. That's going to have a tendency to push us down a little bit. But if we started trading up there and any orders went off at 17, there's a very, very good chance that most of those orders would cancel. And the market probably wouldn't think too much of it, although probably what happens then is they hit the market orders and they kind of push a little bit higher. But, you know, like big orders get pulled all the time. So it's really contextual, right? If it's a big order and it really seems to be like affecting the market and then that order cancels, then yeah, we're going to go up through where it was. So I have a video about dealing with large orders and spoofing, where I kind of talk about that sort of behavior. You know, so it's kind of difficult to tell you, like, to predict what's going to be the ultimate outcome. I can only just tell you the different ways in which it plays out. So at the moment, the dollar is gaining strength here, and so the treasuries are falling back down and yields moving back towards the 4% mark. I'm just reading. I'm a little distracted by this, so I'll tell you what it is. So Matt Walsh made a comment about ADHD, saying, no, you don't have ADHD, you just get distracted because you live your life surrounded by distractions. No, that's ADHD is a real thing, Matt. I don't understand what is this thing with certain group of conservatives and like hating on ADHD. You notice that? Well, I'm not liking that little drop there, man. Remember, I was thinking of like taking it off at -5, and I said, let's give it more time, and that was a bad decision. Because it seems that the Japanese yen continues to fall here. The dollar is getting stronger, the yen is falling, and the treasuries are reacting accordingly. Oh, dude. I shouldn't read about this one to you guys because it's drama, but there's this post on r/day trading, the most arrogant thing I've ever read in trading. You can go and read that. That's some crazy stuff. Most think that we're just trying to get Adderall when in reality it's not the case, because often Adderall doesn't help. Well, so when you're on Adderall, you should definitely be able to detect some sort of a difference, although you kind of get used to it, and sometimes it's kind of hard to tell, right? But you are correct in that that doesn't necessarily solve the problem, because what happens is you will have behaviors that are ingrained into your brain that you have to overcome, basically. So once again, there's this push to get the rates above 4%. Yeah, there you go. Pills don't teach skills. Oh, that's great. Yeah, that's exactly it. And that's the place where I think a lot of people run into issues, because I've seen this a couple of times, like it's from influencers or whatever. Like, people made videos. There's this one guy that made a video about this. It happens to a couple of people, is that like when you get on the medication, at first it's like you're seeing clarity for the first time in your life, so you're really excited about it, right? But within 3 months or so, you will immediately hit a wall, right? Because what happens is your body gets used to the gets used to the different levels of neurotransmitters, and so it's still having an effect, but it's not like consciously obvious to you that it's having its effect, right? And so at that point, then you start to focus on your performance, and you'll be more aware than you were before, that your performance doesn't match up with what you want, right? And the only way to get through that wall is to have skills. And so the way that I would say it, the way that I would approach it, is to say, at that point, you have to pretend that you're not on the medication. You have to build up all of the systems and everything out around in your life that will allow you to cope with your ADHD as though you weren't on medication. And then what will happen is, because you're on medication, all of those habits and systems will stick. And then after you've been doing it for a few months, then you have the routine down, and that's how you actually, improve. Yeah, well, you really shouldn't get a euphoria feeling. If you have a euphoria feeling, that's an indication that you're getting too much or that you don't actually have ADHD. It's kind of more like the feeling that something is different. Yeah. I get, man. I tell you, the one of the things that is interesting though is that, like, euphoria is a real feeling that people do feel naturally that ADHD people almost never feel, right? Yeah, that initial feelings of something improving. And it wasn't until I got on medication that I was really, well, I could feel it without my medication too. Usually with using music. But yesterday, because I've been having a hard time getting my Lialda medication for my gut. And yesterday I finally got it, and I felt so good when I finally was able to get it. Even before I was able to take the pill, I was just so happy that I finally had it. Seth, why did you cancel your bids? I need people to lift the offer. I'm working my option spreads. Oh, you know what? I don't think I canceled my bids. I think that they had all gotten filled, right? So now that we're down in here again, I could add a fourth contract. You know that I feel ADHD suspect. I never feel any overt joy, euphoria, pleasure, and things other people normally enjoy. Yeah. Because most people feel really positive when they complete a task. And when you have ADHD, when you complete a task, that just means that you have to move on to the next task. Okay, dollar seemed to back off there a little bit. Is Journalytics? Yeah. So Journalytics is something that's provided to you when you have the live trade journal, or sorry, the live. Actually, I don't remember all of the details, and it kind of changes over time. But like, I believe that Journalytics is part of your live trading license subscription, and if you don't have that, you can subscribe to Journalytics separately. Or if you're using a different platform, because Journalytics does work with other platforms. So they're trading a bit of volume here. Where did oh, okay, I did get the fourth contract. I guess I can try and add the one up here. Well, so the different jigsaw, when you're purchasing, there's like standard, professional, all that's different between those is the education materials that come with it. They're basically bundling it together with an education course. Which is why the vast, and I literally mean like, 99% of referrals that I've seen go through are for standard. I just need to get one of those little things that you put on your monitor that you calibrate your colors with. Institutional is for your average retail trader you're probably not worth it. If you have the money, then go for it. But everything that you need to know is in the other materials. Well, because the institutional is geared towards somebody that's working at an institution. I don't know. I haven't taken the institutional, but like Peter Davies himself has said to people, you don't need that one. That's not your problem, right? I mean, like honestly, for you, Saf, the first thing that you need to be doing is just watching the market and trying to analyze what the flows are at that time, right? Until you start doing that, a lot of things are just not going to make sense until your brain has built the pathways for it. So you're going to have to come in every day, trade it, and do that ritual for a couple of months before, your brain is even like built the groundwork to understand some of these things, right? I find this often, there are a lot of people will say on some of my videos, like, what you're saying is too smart and it's going over my head. What I'm saying is actually really, really simple, but because the models that you have in your head and the ideas that you have about the market in your head are so different from the reality, it seems like it's a lot to handle. And as you go along and you do this every day and your brain builds those pathways, you'll look back on it and you'll be like, oh, it's so stupid simple, right? I believe, there's always been this thing that like some of the best traders are not the hyper smart people. They're just regular guys that are humble. And I really think that a large part of that is because, you have a cleaner slate to work with. Because if the slate already has tons of stuff on it, and then you're trying to write this thing somewhere in there, it doesn't work very well. Can two people or more? So the Jigsaw license is limited to 2 computers, I think. And I don't think that it will let you use the 2 computers at the same time. Do you think seeing live cash yields is beneficial? Okay, so if you have the ability to see what the bid-ask spread in yield terms is on broker tech, that could potentially provide edge for you in the treasuries. Yes. But it's very expensive. It's very difficult to get for retail trader. I think that the only real practical way to do it is through trading technologies right now. And when I've looked at that data, the spread on the micro treasury yield futures is usually smaller than the spread on broker tech. So can't see bid-ask, just spot yield. Are you watching it? Are you looking at it through Refinitiv? I'm guessing that you're looking at it through Refinitiv, because I can't think of anywhere else where you would be seeing it. Yes. So that's what I did. But there's two things about it, right? The first thing is that the micro treasury yield futures, they're pinned to the benchmarks from BrokerTech. And what you get for the yields in Refinitiv is the other one, TradeWeb, is TradeWeb. So there can be a slight difference between BrokerTech and TradeWeb. So that's the first problem. And the second problem, there is a place, I can't remember how to get into it, but if you dig down enough, there is a way for you to create like your own grid that will show you bid yield and ask yield. It can be done, okay? But when you get that, you will find that the spread between those is larger than the spread in the treasuries. Okay, that's the second thing. And then there's a third thing, which is that the earlier in the month it is, the bigger the difference between those two things are. So what you're going to see, like right now, because it's fairly early in the month, is you're going to see that like these treasuries, their treasury yields are like 398, and you're going to see that the actual bid-ask spread in Refinitiv is going to be more like 397. And the reason for that is because you have to account for the cost of the carry, for you holding it the whole month, which tends to be around a basis point, right? So in order to like do anything with it, you would have to calculate the cost of the carry, right? And then, you know, account for the change in the spread and all of these sorts of things. And so in the 5-year where like nobody is trading, it might help you. But is it worth the amount that you pay for the Refinitiv thing? I personally decided that it was not. But it is still super cool, right? Now, I feel that if you were trading stocks and you got their package that was more geared towards stocks, then that would totally be worth it. Because then you're getting some really high quality research and stuff, right? I don't know. The bigger thing is that you know, there's a reason that Bloomberg is on top, you know what I mean? the platform that you're getting with Refinitiv is just not on par. It's kind of hacky. There's you know, as a developer myself, I see a couple of deficiencies in it where I feel like they could have done things better. So they're still kind of doing this thing where it's like, it looks like there's the buying there and everything, but something still seems to be holding them back. And I get back into this mode where it feels like I'm infecting the market, where like the market is fighting me, you know? It's been a while since I caught the easy one and like everything goes my way. It's like I have to hold out for a long time, and then maybe after I give it up, then it goes, you know? Ugh. I'm starting to notice that the people on Reddit are starting to get fed up with the smart money concepts crowd. We're definitely being dominated by the dollar right now, because this steep incline that we had all the way from 12, right, was not really accompanied by a whole lot of market buying in the treasuries. In fact, it seems like at the moment the treasuries are leaning towards short, right? They only did that because of what the dollar did. In Thinkorswim, I can see those other yield ones. Yeah. I can't remember where those ones come from, but I also can't remember if you get those numbers live. That's another problem that comes up a lot. Oh, see, there was, I don't know if you guys saw it, but like my screen blinked out. Gosh dang. I mean, they're fighting it, but there's the S&P 500 running. Yeah, my news squawk, as soon as I said that, my news squawk also said something. It was like, yeah, they were all watching it and seeing them just kind of sitting there at the highs, and then all of a sudden to say a bust through. Yeah, I don't know, but the bigger point here to make is that the basis and the spread are significant enough factors that if you don't have an edge in calculating those things, the other data that you might have doesn't matter at all. Does that make sense? Sorry, I shouldn't say does that make sense. Are my words... Am I doing a good job of explaining that? I'm not sure if I'm doing a good job of explaining that. Basically, you know, maybe I need to give a little bit more context. I went in and I said, I want to be a market maker in the micro treasury yield futures because the spread over here on the 30-year being a 10 tick spread is stupid. It should be smaller than that, right? So then I went about saying, okay, well, I need some data to arbitrage against. I need a yield, a number on the yield that I can arbitrage against and say, based on this number, this is what I'm going to put my bid and offer at, right? And what I found was that the basis, which is the difference between the future and the cash, to account for the cost of carrying it, and the spread in the cash market were significant factors. Significant enough factors that I would not have been able to provide a tighter spread than what was already being provided. And so I think that the reality is that the reason the 30-year has this spread is because that is what the market makers, that's the best that they can do. And the only reason why the 10-year has a tighter spread is because there's more people trading it. And that everything within that range there, like between 3983 and 3977, where the big orders are, everything in between that is kind of risk taking. Is based on a little bit more of a speculative setup, which is a disappointing thing to find out, but that was the reality. So there is a bit of a it's I'd say it's moving around a lot here. It looks like there was some selling in here, like some 6,000 orders sold it to bring it back to 16. But now, like, not really follow through, right? Now it's just kind of like fighting around. And maybe fighting around because of the dollar. Because I don't know if the dollar moved enough, if what happened in the dollar was significant enough to really move us that way. But the equities took off at around the same time too. That's another thing, so. What am I looking for? What's the word I'm looking for? I was just saying to the guys that we talk with in the interest rates channel and Discord, like Dennis, that, you know, there's enough auto correlation in some of these moves to suggest that there are large meta orders at work, but there's like, you know, there's no way for us to sort out why they're trading. For all we know, it's just all positioning, you know, like as far as we're concerned, it's just kind of random, it seems to me. Yeah, new opportunities to make over 150K driving for UPS. I was talking about that with my wife yesterday. I was like, how can they really afford to pay these guys 150K? Really? That seems so crazy to me. Like, how can UPS... How does that not result in a massive increase to shipping fees? That number seems so crazy to me, because that is so far above what most people make. Like even in my industry, 150K is high. You know, like in the software industry, at least relative to my area. You know, once you're getting over 150K, you're not just a normal developer. You have to be going into one of the roles that's in high demand, like cloud engineering, AI engineering, site reliability engineering, or you're doing more of a leadership architect kind of role, right? To be getting to that point. So for that to be the base pay, or rather the average pay for UPS driver, is just sounds so insane to me. Now part of it part of it probably is that, you know, if you're in New York, 150 is not crazy, right? If, you know, because you can take what that, like 150K in Utah is more like 215 in New York, right? So it could be that, you know, when you sort out how many drivers are in the areas that are really expensive to live in and so forth, and then that's why the average comes out to 160K. I don't know. Still, that's gotta hurt for UPS's bottom line. I'm not sure I understand how you make that work out with from a business perspective. Silicon Valley soon in drought of tech workers. Well, I tell you what, there's no shortage of people willing to work for UPS now. I warn you, UPS is not an easy job. It's not necessarily an easy job, is it? But there's going to be plenty of people fighting to get those jobs now. 17.5 seems to be the new 16, so I guess I should recenter. I was a UPS driver helper when I was 16. It's not that bad. Well, okay, so why is a UPS driver not an easy job? Yeah, I think what, you know, what is bad and not bad is all relative to a person, right? I'd say for the amount of money that you make, that you'd be making, it's well worth it, right? I think that where some people have problems, you know, doing the job is you're often working long hours because you have the route and you just have to get through your whole route, right? And you're often doing so in the heat of the day with very little air conditioning. But when I say, oh, sorry, hold on a second here. Yeah, okay, I'm doing the right playlist. But when I say it's not an easy job, like, I'm sure that 95% of the people that hire continue to do it, right? Get on the ground floor, work for FedEx, soon will match. Yeah, well, they're gonna have, yeah, I did see the suggestion that they're gonna kind of have to, huh? Well, so I think what you're maybe picking up on live action is that the UPS workers were threatening to strike, but they were able to make a deal before anything happened. I mean, the issue here is that if the UPS workers were to have gone on strike in that situation, it would have hurt the company so much, and frankly, it would have hurt the rest of the economy as well. Like a strike in UPS, if it was long enough, it was the sort of thing that could like single-handedly lead to a recession, right? So in that situation, the workers had really strong negotiating power, and I think that's how they were able to get the number that they did. But like, still, how does the company go forward under those conditions? I guess we'll see, but I don't think it's going to be very good for the stock, right? And it does kind of suggest, because, you know, like the Biden administration was touting this and they're like, this is going to be the summer of strikes and all of these sorts of things. So, okay, do you want wage price inflation spiral? Because that's how you get wage price inflation spiral, folks. Because I'm sure there are plenty of, you know, junior software engineers out there that are sitting there being like, well, why am I working for $90,000 a year when I can go and get almost a 50% pay raise working for UPS? Right? Because software engineers aren't going to ride around in air-conditioned trucks and taking 40,000 steps a day. I think that a lot of them would. You know what's kind of funny? You know what I found to be the most popular hobby among the tech software engineering crowd? It's Ragnar. Especially when I was at Goldman. They always had a Ragnar team. So they're not... I'm sure there's plenty that would. Would they be able to get the job? That's the real question, right? Because the thing when the software engineering is that if you've got the skills, it's so easy to find a job because they're just so in demand. But then they're not actually getting as much of an increase off of the inflation in pay as maybe they should. What's with that? Maybe the negotiating power of a union is count for something. No. So UPS drivers were making okay money before that too. Like, I think that their average salary was actually more like 120 or something. So that's still a big jump, right? But no, UPS drivers were not making 60K a year. It was like if you were a UPS driver and you had been there for 5 years or more, and apparently a lot of people don't make it that far, but you were making 6 figures. Believe it or not. Yeah, I was surprised when I found that out too. Or at least that's the numbers that I read, that it went from like 120,000 to 150. Now, there might be some nuance in that number that makes it not quite as impressive as it seems, but, you know, like, I'm sure that a large portion of that is in benefits, right? So what if like 30-40% of that is in benefits? Then really what it means is that their take-home pay is actually more like 100,000 a year. Like, their quote-unquote salary is 100,000 a year, and how they get to 150 is the benefits, right? Made $30 an hour in the 90s? Wow. In the 90s, that was good, right? I have to say, the Treasury here, starting to act a little random, but there is still a decent amount of volatility in this, isn't there? My best friend's dad is a UPS driver for 50 years. It's definitely not as cushy of a job as software engineering. Although, so this is something that I've been seeing on TikTok and other places that kind of triggers me a little bit, to be honest. Is like, there's these guys that be like, okay, I was getting done for the day, and then my boss is like, "Hey, can you take a look at this thing?" And then it ended up being the log.j vulnerability, which it was a vulnerability in a common logging library that could give attackers access to the entire program, essentially. Would allow them to hijack the entire program. And so they had to go through over the weekend and replace that library with the new version in every piece of software that had it in their company, right? So he was like about to be done, and then he ended up spending a weekend working until like 3 or 4 in the morning every day trying to fix this problem, right? And the reason why I say like it kind of triggers me is I'm kind of like, well, yeah, like if a real serious issue comes up that makes you vulnerable or makes your system goes down, you work until it's fixed. And they were acting like this is this huge ask and imbalance in your work-life balance, and I can't work in the software industry anymore because of these sorts of things. And I'm just like, you're just, I mean, maybe you worked at a place where if they're doing that to you every day, or you allowed them to get into a mode where it's like that every day, that's a different thing. But, you know, if something like that happens once a year, that's normal for software, and that's why you get paid so much. And I feel that what happened was a lot of people after me, younger kids, because when I went to school for this stuff, you didn't do it unless you were interested in it, right? But it seems like since that time, a lot of people have come into the industry that came to it for the pay and kind of hate it. They kind of hate doing it. "2016 memes? What? I bet you we're going to get some pushback on that UPS story. Like, the more that I think about it, the more I'm like, well, okay, when you take out the taxes and you take out the benefits that they have, because they probably have pretty excessive benefits, their take-home pay is probably more equal to an employee that's making $100,000. Like, their salary is probably closer to $1,000. Or sorry, 100,000. Which is a lot, but not as crazy as because I think everybody is thinking, oh, your salary, your take home salary is 150. Well, that's like more than like doctors make. When the reality is that most of these jobs that have a salary of like 150K, when you look at the overall cost to the company, when you add in the benefits and stuff, they actually cost more like 200,000. Do you have a UPS position? Well, what is it at right now? Has that news story affected them at all today? Oh, well, you got a way low, yeah. Cool. I guess I might be able to stretch for 18. We'll see. UPS. Well, the day that they announced it, the UPS did decline, but it wasn't that bad. That's one of the rangiest stocks I've ever seen on a long time frame. Oh, wow. So you must have gotten it back in 2020 then, huh? Oh, dear. Oh, dude, it totally... I look away for like 1 second and it jumps back up again, huh? And was there a change in the dollar on that one? There was a change in the dollar, although they don't seem to be very value correlated. And saw the Japanese yen decline there. So the yen may be more of a factor here than the dollar overall. Nothing quite completely matches up. This has kind of been the thing in this market I'm finding is that, like, you know, it's just way more mixed. Like, it used to be that I could go and I could look at the cumulative delta and price and cumulative delta would be almost exactly in line and everything was cool, right? And then if it wasn't, I could go and I could look at something like the 6J or something and I could very clearly see where, you know, it was actually a correlated asset that was driving the action. But now it's kind of like, no single thing can really be pointed to explain why the market is doing what it is. Other than where I took positions at. Man, oh man. So today, there is an auction today, right? 30-year bond auction. But I haven't seen anything over there that gives anything interesting. So I don't know. I just really can't explain what's going on here. It's certainly being a stubborn trade though, in that, because at one point I was plus 13, but that was very brief. And then ever since then, it's like it'll come back to my break-even spot and then it can't get any higher. We're kind of back to the line where you maybe would see support again. Oh, this time it's lining up at 4%. I don't know. I am seeing selling in the 30 and the 5 though. Well, we're seeing selling in the 10 year across this range as well. That's, I'd say, not super pivotal in like the larger scheme of things, but it is selling. And I can't quite. Well, let's come back over here and think about this for a little bit. So there is the issuance in the 30 year. Brain battle, Elon Musk open to cage match debate with Mark Zuckerberg. Oh, maybe his health is not good enough anymore. Stop above the volume node, hoping for a repeat of the wide range shape? I don't know. So this is a lot more short-term volatility than you typically see in the treasuries, right? But there does seem to be, like, on the higher time frame, a volatility compression. You get what I mean? So, like, they didn't breach the lows again when they tested it last time. They didn't breach the highs again when they touched it last time. But when you look at the range of like a 30-minute bar, they are higher than average. So what I'm trying to say is, given the current conditions, I'm not so sure that the play is to be looking for stops on a new higher, new swing high, new swing low, right? There is still the possibility of meta order coming in and pushing us one way or the other, though. But and you can see here, like, that was a pretty strong decline that happened. It was pretty quick, and you're already seeing the pushback, right? We'll see if we can work something out with our sim position in ZN. We still got 45 minutes. I was hoping that match would happen. Edge clears late. Yeah, it's okay. I kind of feel like if you're not using Jigsaw and you're on edge clear brokerage, you might as well. But it does have a cost. So there had just been I can't describe what it was. There was a little bit of a fight there at like 14. It happened so fast it didn't completely process what happened. I can see some people trying to take positions in the micros as well. Yeah, it's similar. I mean, it has the stuff that is needed to get the job done, right? I wouldn't say it's the best, most refined, best looking, most features, but it has the stuff that's necessary to get things done, and the things that they do they do in a pretty polished manner. Ouch, ouch, ouch. So again, they're able to move like 4 ticks on nothing. Those bids just evaporated underneath of them, didn't they? Until 13. What do you mean, Saf? You install the application, you put your license key into it, and then you start opening up Windows. And you can, and you connect it to your data. If you can't figure out how to install the application using their documentation, trading probably isn't for you. You have to figure that one out on your own. Well, you'll go set yourself up with a broker first. That's the first thing, is you want to set yourself up with a broker. Yeah, you can pick any broker you want. Well, pretty much. I'm using Edge Clear. At what point would you pull your ZN trade as a loss? Oh, this one? At minus 1,000. I mean, it is a sim trade, right? I don't emphasize this as much as I probably should, because I used to spend so much time talking about it, but I just want you to realize that when I take these sim trades with multiple lots over in ZN, what I'm doing is quite risky and has a pretty ugly left tail. No, Jigsaw is not a data provider. So you want to get a broker that has Rhythmic or CQG data. Or there's a couple of other choices, but probably you're going to get Rhythmic or CQG. Oh, because what it's a risky thing. So when I'm doing this, there is a benefit to me personally in learning how to manage this and in trying to be able to read the liquidity, but it's just not something that I would do with my live account unless I really had a big wad, right? Because basically you have to be able to handle a really nasty drawdown. Right? So this is sort of a strategy might make sense if you were like a proprietary market making firm. But for an individual retail trader account, it doesn't necessarily make sense. Right? So that's why I do that one on Sim. Now, on the split side, I do have a live position in the micro 10-year that's underwater 20 ticks. Right? Should I give up on it or not? I don't know. I probably should have scratched it at some point, to be honest with you, because the market has just not been cooperating with me overall today. But, over here, I'm able to eat that risk because it's so small. If this ended up being like $100 loss, my account could still handle it, Yeah, I'd say it's more a learning experience for Xeon. Yep. I mean, I'm not doing terrible. My average price is in the middle of this range that we've been having, so I would say that I didn't do a terrible job. I just did an average job. No, the Jigsaw does not provide market data stuff, so go and read the websites. I really strongly urge you to go and read the documentation and the facts on both Jigsaw's website and on the website for whichever broker you decide that you're going to be going for, and understand all of these things before you jump into something. As a 12-year-old, can you get a broker? No. If you're 12, that's something completely different. If you're 12, what you should do is you should just watch the stream and pretend that you're trading on my DOM and write down which prices you want to take and do that until you're old enough, and make sure that you do really good in math so that you can go and work for a firm someday. Well, okay, so you can, okay, so really, if you want to trade sim, you still want to go and open an account, right? Open up like a $500 account at Ninja Trader Brokerage or Amp Futures or something like that, right? And then you have to pay for the live data, but you don't have to actually risk actual money trading it, right? If you really want it all for free, you can get a demo account. So most brokers will offer a demo account, but because of CME rules, a demo account can only go for 2 weeks. So at the end of 2 weeks, you will have to get a new account, and you can probably try doing that and using different email addresses until they catch on and ban your IP address. Investing.com has live futures charts now? Really? I don't believe you. But that won't give you depth of market, right? Let's see here. GC 1949.6. Oh, looks like it is. You might be right. Okay, so the data fees for CQG and Rhythmic, they're basically all pretty close to the same, because the main cost comes from a fee that the CME imposes. So it tends to be around $30 a month. So that's why I'm saying, like, you can go and start a $500 account and then, only trade sim, and the money that's in that account will pay for the data fees, and you can trade sim on that for several years, right? Essentially, yes. You get CQG data for $30 a month for your sim. But you will have to also open up a brokerage account to do that, right? You'll have to open up an account with a futures broker. And the futures brokers usually have a minimum account, which is around $500. But you notice the way they're doing this, I'm kind of concerned. Can you not buy CQG directly from CQG? Not that I know of. Maybe you can. I don't know. Okay, so I wanted to point out, when you look at all of these cases, look at this. We moved down. We ranged there for a little bit. Spike back up briefly. Only there briefly. Come back down. You know. Wiggle around down there a little bit. Come up. Again, it comes down pretty hard. Wiggle down there around a little bit. I feel like it's priming us. When I start to see a pattern that's so clear, the first thing that I think of in my head is the market trying to prime me for something? Like it wants me to be buying down in here. I don't think that you'd just go and buy the data. Sorry. It's always done in coordination with the futures broker. I think through Myris that they offer that sort of a thing, but they're more expensive. You want to get a broker. No, if you're really 12, what you really should do is you should go and create a demo account at Ironbeam. So if you go and create a demo account at Ironbeam, you go and you know, give them your email address and download the or not download, you just open it up in your web browser, and you would be able to be up with a DOM on sim data within less than a minute through Ironbeam. But it will only be the 2 weeks, and then after that, I don't know. Well, if Tradeovate is your broker, then you're probably using CQG data, and you just need to get your data credentials and plug them into Jigsaw. Pretty sure that if you get a Tradeovate account that you'll get data in there somewhere. Well, actually, maybe not. You might have to ask Tradeovate support for the credentials to be able to. Yeah. If you're on Tradeovate, you should ask Tradeovate support how to configure with Jigsaw. Because now that I'm thinking about it, I'm realizing, like, oh yeah, Tradeovate kind of has a web interface. So if you wanted to use Jigsaw instead of the Tradeovate interface, you would probably need to talk to support for them to enable it. And I think that they have some facts about it too, probably. Do you think one side of the players in the range are going to get run over? I don't know. Here's my theory. My theory is that when the meta order that's selling here is finished, that there will be a short-term regime change that might move us back up to 16, and then it will go dead. That's what I think will happen. But who knows how big this meta order is? Maybe they just keep selling. Jigsaw is a partner with Trade-of-8, but Next Step says you can use the same login. I've never used them, so I don't know how that works. Yeah. What do? You just connect, you set it up to connect to CQG using the same credentials, or is there a connection specifically for Trade-of-8? Maybe you do new Trade-of-8 A and then enter your Trade-of-8 credentials in for that. What meta order? Well, so I don't know. All I know is that when we come over here and we look at the 10-year, there has been, for the last hour or so, been some degree of a meta order selling from a high of 75 in cumulative delta down to 56. So about net 20,000 contracts selling over the last hour. So I'm saying that's a meta order. If the meta order completes, then you would get a short-term, short-term post-meta order regime change, which would probably come back to like 16.5. That's all I'm saying. You say ES is filling in the pocket between two nodes. Yeah, either way, this has turned into a pretty odd market, wouldn't you say? But back to the question, what meta order expecting? I was not expecting said meta order. I can only see that over the past hour there is evidence that there was one. And what the future holds, given the way that this is played out, probably our ability to predict the meta order is probably pretty limited. But I already have a position on and I have a plan to try and manage it, so stick with the plan. When you want to connect to Trade-of-8, Jigsaw opens the Trade-of-8 browser and you just log in. Oh, okay. But you do set your connection to Trade-of-8 A then. Yeah. I appreciate you guys that don't usually talk coming in and trying to answer the question. Okay. So they are doing it again when they come back up, it just does it awfully quickly. Now, are we seeing signs of a strong meta order buying? I am seeing a little bit of that in the 30-year, but not the rest of the curve. Hey D, how are you? Wow, it's really going. It's really weird to me how when they decide to go to the other side of the range, how quickly it happens, right? This is definitely not standard behavior for the treasury market. It is not. Nick Timoros, the last two inflation readings call into question whether the Fed will need to raise rates again this year as officials projected in June. Before these last two reports, and makes a September hike unlikely. This is the Wall Street Journal. That is something that could move the market. That move up that we just saw may be from the Wall Street Journal story. closed too early this short. Oh, were you short the E-mini? Well, I don't know why the E-mini just dropped there, but the treasuries definitely did there. May have been that story. Hard to say, you know, because it's well within the range of behavior that it's been doing for the day, right? I think I'm going with what was it? Okay. They're building back out at 16 again. I don't know, man. Oh, you think you're going to go with Edge Clear? Well, who were you using before live action? I really like Edge Clear. You know what, though? Like, yeah, going back into the broker discussion, I really think that you should go with a broker that you like. Like, because they have salespeople, right? So you send a sales inquiry in and they'll start messaging you and asking you questions. Go with the guy you like. That's what I think. Because really, when it comes down to it, your broker in futures trading, your introducing broker, is really more about the support. So helping you get set up and helping you when something goes wrong. And how much you like that person matters a lot when you get into that situation, right? So I would go with the guy that you like, because I really don't think that the difference in commissions really ends up being a major factor for most people. Do you have any experience with the ATM strangle type of trading some use around big news events like CPI and non-farms? So I've never tried doing it explicitly with like ATM strategies, but I would say that around most news events, trying to say, oh, you know, what direction does it go first, and then just bank on it continuing to run in that direction, isn't going to work very well for you, because it's just too common for it to do a head fake. It's too common for them to make a move one way and then getting some sort of counterintuitive move the other way the whole rest of the day, you know? And on top of that, the price that you end up getting in those situations matter a lot. And so there's a lot of things where you might look at it on the chart and you say, well, okay, I would get in here. But if you're going to do that kind of analysis, what you should really be saying is like, okay, so if we're at 15 and I want to say, if it gets above 16, then I want to stop in, I would assume that some slippage. I would assume that you're going to lose like 2 or 3 ticks in slippage. TradeOvate is probably the best way because it's a premium. Well, but because their data fees are baked into their monthly cost that you pay, right? The $100 a month or whatever. Oh, I've been doing it like this for a year. No more problems. I only create a new account every 2 weeks. Oh, how does that work? I thought maybe they were going to hold it here, but they came back to the bottom of that range again. Wow. Carl Quintilla retweets Mark Dow. Fun fact, Twitter's debt burden is 60% floating. Yeah, that's not good. So when if the worst happens in Twitter, and we get to the point where Elon Musk has to sell Twitter, then what happens? Does Twitter go down, or does somebody else buy it at a discount? So there was that offer at 15.5, and it was a little flighty, but they, they hit into it and the order pulled, but then we still ticked it down. So should also note, Bitcoin, they took a little bit of a jump off of the news, and they've been declining this whole time as well. And the S&P 500 is giving up all of its gains now. Sorry, from the economic release. I do think that this latest jump up in the treasuries was probably because of the Wall Street Journal story. So what that means is, like, the seller's is still there, right? Without that story, we might have actually have broken that range down to the downside again. Because this is just, oh man. I don't know, man. I really don't want to give up on it, having been in it for like 2.5 hours, but it's kind of looking like I'm going to have no choice. Something changed? No, I don't think something changed. I think that somebody's been selling, and I think that meta order wasn't done, and that there was a jump up because of the Wall Street Journal story, and then that guy with the meta order just started selling again. That's what it looks like to me. It's turning into, well, it's, to hold it for like 2.5 hours in the treasuries is okay, but it's definitely not working out, right? I mean, the funny thing here is that I've been expecting this reversion back up, and that I'm just going to scratch it. So it turned out to be not a good trade. I was making the play that, there was some guys getting stopped out from profit taking and stuff like that, and that it was going to revert back up. And it looks to me like that theory was not unwarranted, but that the price that I got wasn't good enough to pull it off. If I had been short somewhere like 410, then I would have ended up making money. I'm saying I noticed a hiccup across. Well, there was definitely an impulse of something, yes. But was it, is the impulse that you're noticing the one that happened around 8 minutes ago? Because I think that was the Wall Street Journal story. Now, why the S&P 500 started selling since then, I'm not sure. That is a little weird to me, because I don't think the S&P 500 is selling because of Nick. But again, just to reiterate what the headline was, Nick Timmermans tweeted, "The last two inflation readings call into question whether the Fed will need to raise rates again this year, as officials projected in June, before these last two reports, and that makes a September hike unlikely." So before, the market was pricing a reasonable chance of a September hike, and now they're basically pricing that it's not going to happen. For some reason, that doesn't seem to be getting rates below 4%, though. So but I think I would have to say, yeah, I don't know why we're so selling this. I think that the other thing that we have to say is that there seems to be a lot of flows that are going through in the market right now that seem to have, we're waiting for the CPI to get done, but have absolutely nothing to do with what the CPI number actually was. Big MVO offer in ZF for an hour. Oh, wait. Bill Ackman covering. Well, I don't know, because here's the other thing is that, okay, so I am seeing this consistent decline in cumulative delta and everything, right? But the other thing that I'm seeing is like when it moves like the bids just evaporate, right? So I don't know what's with that, because I don't really, well, I did see the Japanese yen shift. The Japanese yen did shift, so maybe it's that. Well, I'm pretty pissed because this is like the second big loser in a row. I had chances to get out of it and I didn't. I tried to hang on. I think that was a bad choice. And that was what kind of happened on the last one too. I feel like I keep making bad choices. Well, okay, so you're trying to... Oh, well, okay. I think maybe I understand what you're trying to say. Why do retail traders pretend to have an insight into traders' intentions, i.e. they are hunting for stops? So to say that the market is hunting for stops, that would be you trying to read into their intentions. That would be you hallucinating their intentions, yes. I mean, that people do that for some reason. I don't get what it is. Sometimes you can tell based on the information that you have and the way that it's being executed. You might be able to tell what it is, right? Because different players have tendencies to execute certain ways, right? So if you have a piece of information and then you see the execution going, fucking hell. So a little bit of pushback there. That like to abdicate themselves of the responsibility. Well, I think one of the issues is that most of the time when you're wrong, it's not necessarily your fault, right? You know, it's like you think that there's a certain flow that's going to move in, and then some other freak flow that you didn't know about pushes the other way. Is it your fault? Like, there's no way that you could have seen that, right? What would be your fault is at what point do you decide that it's not doing what you wanted it to and you bail, right? Which seems to be my problem right now. What time? I got in at 3980 shortly after the news release. It was like 5 minutes after the release. So jeez. For 398. So we've basically lost 3.5 basis points on this trade, man. Jeez. I'm just gonna puke it. Now that I've puked it, it can reverse, right? Yeah, sometimes that's the way it goes. I mean, I'm tempted to try and like reverse it and stuff, but like the reason it pains me is because I still see a reason for it to reverse back up. I still think that I could get a better exit, but you know, I've been waiting for that better exit that whole time, and it just like gets yanked away from me every time, right? I'm probably, you know, and it's close to my time anyways, so I think that it's better for me to just not touch it now. Lick my wounds. These two losses, this hurts. It's gonna take me a long time to build that back up. I don't have enough time to talk about Navinder. Sorry. Yeah, I'm really... I don't know what to say. It really sucks, man. I mean, I'm sure we'll dig back out of it, but... Oh, it was 35. Yeah. It's the individual one is not what matters. What bothers me is that over the last 5, it's basically $100 drawdown. And it took us a long time to get that $100, right? And then we lost it in a few trades. So there's some real problems with the way that I've been trading lately, isn't it? I've been taking trades that were just like explicitly against the way that it went. So I'm either like trading in a period where I just really don't have an edge, or there's like something very flawed with my analysis, which is kind of weird because I have felt like I've had a pretty good handle on the ebb and flow of it, you know? So it's kind of weird to me that I've taken this drawdown. But like this larger thing, which is like, why are rates spiking back to spiking back above 4%? I don't get that. I don't get that at all. There's something is selling this quite heavily, and I don't know what it is. It doesn't make sense to me. But something that I would expect to see here based on this now is that it may just settle there. That's true, Uzi. Bids are feasting down here. But like that's kind of been the thing though, is that, well, so when I come back here, you know, like when I look at the cumulative delta, you know, okay, so there was a change in cumulative delta, and which is why I took a trade somewhere in here, and that was okay, right? And then because we came up there, I thought, oh, okay, we'll come back here and then we can do this or something, and we'll come out here and I can get rid of it, right? And then it just kind of like slow. Okay, so like, here's a big change in cumulative delta to the downside, right? Held it, didn't do anything. And then in some of these places, it just like it moves very, very quickly, very fast on not a whole lot of volume, right? Like on this one, the volume came in after it dropped, right? So it's not really reacting very cleanly to the actual order flow, but it's also not reacting very cleanly to the, like correlated assets like the Japanese yen. So the way that these guys are executing right now, it seems to be in a way that's very, very difficult for me to deal with, right? And when you come back into the larger thing of it, which was like, okay, so like on that one, what made that trade wrong? Well, I did have an overall idea about what was going to drive a flow there that was good, but the price that I ended up picking was bad, right? That was the issue with that one. I probably could have waited a little bit, let that play out, and then tried reversing it. Yeah. But, there's like lots of weird stuff going on today. The market doesn't always trade clean. Some flows are just not predictable, right? Well, I do think that I was on the losers. I've risked too much. That's true. So I can't justify in my head why I decided to take more risk on these last few trades. I've been saying like, oh, well, it's a little bit more volatile of a market. You have to give it a little bit more room and things like that. But in every one of these instances, it's like I never get the flows back the other way. And the earlier that I would have cut it off, probably the better I would have been. Right? Why are you being... Well, they're not, though. The 5-year is leading at the moment. Oh, this is very volatile for Treasury. And by the way, breach of new lows there too. Can't explain it. Like somebody said earlier, maybe Bill Ackman is defending his position. that would make sense. Or somebody is doubling now that the CPI is done. It's like somebody's doubling down on higher rates for some reason. Doesn't make sense to me. Doesn't. Anyways. So let's put in today's title, Rates Rise Despite Inline CPI. Rates rise despite inline CPI. Anyways, it comes back to I think when I'm talking here, the point that I'm trying to get across here is, why did this not work out? It was because of decisions that I made. And I don't 100% understand why I made the decisions that I did. But you can see like very clearly that it wasn't necessarily because of, some piece of knowledge or something that we think about markets is obviously flawed or something like that, right? It's not that. It's that I only have so much information here, and I'm deciding to take trades in situations where I probably shouldn't be. Right. Oh, you're right. It's the 10th, not the 8th. Or the 9th. So, but what the other thing that means is that there could be some information out there that we're missing, but I'm also kind of leaning towards, I don't know if we could actually sort out why it's doing what it's doing. But it is selling. It is selling. And I find that incredibly interesting. why are they selling so hard? And it's not just selling, it's like this is the other thing that weirds me out about it, is why the market makers pull in front of it. So it's like the market maker seems to know something that I don't. I should have turned around and bought it, because look, we're already at 0.25 now. I said, nah, I'm too tilted to do that. Well, now I'm extra tilted. I'm definitely not doing it now. Stay excellent, team. I'll see you guys tomorrow.